So today was essentially moving day across the board for the US financial markets. If you take a look in the top right hand corner of my screen, the Dow Jones Industrial Average closed down 274 points. We closed at the low of the day's candle. It did leave us with a long day Morobozu candlestick with both a shaved top and a shaved bottom, an extremely bearish candlestick. This is also coinciding with elevated volume. You can see this red candlestick over here. This is just showing us that the close was obviously below the open. The net movement was negative. That justifies the red color to the candle. But in essence, this is starting to set up a relatively bearish type of intermediate topping pattern. What I want to say from the outset of this video is that if you find yourself sitting down looking at the financial markets, thinking that this is most likely the bottom of what is going to be a pullback or what has been some form of a pullback, you are probably mistaken. And I'm going to say that very gently, but also very humbly as well. And I'm going to go through the reasons for that. What we have just done on the Dow Jones Industrial Average is taken out the swing low which was made as at the close last week. Now, on top of this, we are now definitively cracking, or we have definitively cracked both the swing low and also that 20 exponential moving average. Now, again, in continuance, what we saw on Wednesday was another high wave spinning top, very close to that of a doji, very similar to what we saw at the all-time high on the Dow Jones Industrial Average, which was dated the 8th of August 2017. We're also seeing the first subsequent lower high, and again, we have just taken out that swing low point. So it looks as though the markets are again moving into a correctional type of, environment where what has been a very strong trend to the upside is going through some form of a rebalancing at the moment. What you need to understand is that when we speak about macro resistance, also macro support, when we start seeing markets pull back or bounce off from these levels, that is where you need to, of course, begin acting. At the moment, what we are doing is most likely pulling back down into this green box on my screen where this rising 50 exponential moving average is going to once again interact with this sell-off. We still have a few more points, about 120, 130 points to go until we reach roughly 21,627. Now, this doesn't have to take place on Friday. In fact, this can continue into next week. But what this market is doing, if I bring up these oscillators, is that we're just going through a natural reset. We have been relatively overbought. This is common during that of a bullish trend, but you can see collectively across the board, the stochastics, the RSI, the MACD, they have all crossed into bearish alignment. This equates to prices at least not moving higher in the immediate sort of outlook. Generally what happens and what has happened over the past couple of months when we have sort of moved into this bearish alignment is that the market itself has just stabilized. It has moved sideways. And what has happened is that we wait for these exponential moving averages to catch back up to price, and it acts as a trampoline to propel price higher. That is essentially what we are looking at still in terms of more so of an intermediate outlook. But at the moment, I would strongly discourage you from thinking that this is going to be the bottom as at the close on Thursday as to how low these markets are going to drop. Now, if I continue with the discussion also, this is only relevant to the Dow Jones Industrial Average. The CC high has now broken that positive 100 reading. So it's saying that the trend which has been in effect more or less since breaking out in the month or late May, also into the beginning of June, has now exhausted itself. The ADX has definitively turned down, and you're starting to see this across the board, not only relevant or apparent to the industrial average, but it also flows into the S&P 500. Now, we've laid ourselves out certain criteria, okay, in terms of market activity to see before we actually act. One of those criteria over the weekend was to see these markets break above the swing high of their respective swing highs. Now, obviously, that hasn't happened. Generally, I don't trade counter trend. And again, it is a law that I am upholding at this particular time, even though the sell-off doesn't really come as all that much of a surprise. It has been relatively overdue. What you should be thinking about at this particular point is, well, what happens when the S&P revisits, say, for instance, 2,400? It may not get all the way down there, but there is a very high probability that we are going to revisit roughly 2,410. What you need to be constructively thinking about is, well, what happens on the bounce, the subsequent bounce, because that is the make or break moment once again for the markets. Now, I'm going to show you what's going on on the transportational average because, again, the segues or the parallels between that market being a little bit more advanced, all right, and what is going on under construction at the moment on the Dow, on the S&P, and the NASDAQ is very, very important for you to understand. But again, if there's anything you can take away from the question, or at least from this particular market update, is, well, what happens when we revisit lower areas, and what happens when we see the bounce, when the bounce starts to flow through to the markets, because that is really going to unlock really a lot of price movement flowing into at least September 2017, but also it has the potential to sort of set the tone for the rest of the year 2017. You can see also the S&P 500, we closed down 38 points on Thursday's candlestick. We have overshot the gap. Now, the gap I spoke about yesterday, I was relatively suspicious about this potential gap. And again, we wanted to see follow through if this was going to be a legitimate and sustainable move to the upside. Well, what can you see? We've closed the gap, we've overshot it. We have also taken out the swing low. So again, long day Morobozu candlestick, elevated volume on the sell side. This isn't looking all that good for the S&P 500. Again, it has just cracked the 50 exponential moving average. The good news for the S&P is that I've already spoken about the actual support level coming in around 2,410, if not 2,415. Now, again, continuing this discussion into the NASDAQ, you can see we've got 3 subsequent lower highs. We've got a series of long day candlesticks, which is showing up more commonly to what we have seen in the past. I mean, this is somewhat, problematic. It doesn't necessarily mean that we are on the cusp of an intermediate trend reversal or a macro trend reversal, but if you just have a glance, at the candlesticks over the past 2.5 months, you can see, of course, these long day candlesticks, which are becoming a lot more common. All right, just very simply, just doing a visual analysis of the candlesticks alone. Now, on top of that, you can see that we've got these rising simple moving averages. So again, the trend, the macro trend of the market is still up. That is still intact, but more so on a molecular level. What we look as technical swing traders is that we're starting to see the immediate trend break down. You can see that we are definitively closing below the 50, but we haven't broken below the swing low, essentially, to what has happened or what has occurred on the industrial average and that of the S&P 500 at the moment. If I bring up these oscillators for you as well, you can see that they are still bearishly aligned. The RSI is bearish, the stochastics is still bearish, and most importantly, of the 3, the MACD is still showing us negative momentum to the downside. I can bring this up on the S&P 500 as well. You can see that we're actually advancing or accelerating back into negative territory with the histogram bars. This shows us the separation of the fast line and the slow line of the actual MACD buy sell signal as well. So you can see this across the board. We are somewhat in agreement, and it's going to be very interesting to see just how far this market drops over the coming weeks and essentially what happens on that bounce. If that bounce cannot take out the swing highs of these markets collectively, then we may have some much more significant issues in terms of a deeper market pullback and correction over the next maybe 3 months, okay? But we'll speak about that when the time is right. What I want to speak to you about now is that of the transportational average, because I'm seeing a lot of parallels between the transportational average. I mean, first of all, let me just remind you, I started speaking about the divergence which was taking place between that of the transportational index and that of the industrial index a couple of weeks ago. I'd encourage you to go back and pay attention to that video when we start to see these divergences up and around historical all-time highs, especially when you've got, say, for instance, the transportational average not really confirming that of the industrial average. You need to sit up and pay attention to it, because what has happened with the transportational average is that not only has this market produced what appears to be a false whipsaw or a false breakout to the upside, we've seen the subsequent bounce. The bounce is what I've been referencing in the first half of this video up and through till this point with the other markets talking about once they stabilize and see the bounce. And you can see the vote of confidence or lack thereof with the transportational average. What we have seen on Wednesday is that of a shooting star candlestick. It also resembles that very closely to a gravestone doji. Now, what I'm saying to you is that this upper wick is indicating selling pressure. The selling pressure is coming back, or it's showing up right around resistance, which is held essentially all the way back to December 2016. So if you pay attention to this red line that I'm drawing on my screen, you see this upper wick on the candlestick over here on Wednesday. Well, that is showing us that once again, resistance is holding on the transportational average at 9,500. Not only is it holding, but we're starting to see follow through to the downside off from this resistance area. I've had this breakdown trigger on the transportational average at 9,087. It looks as though that once again, this trigger is going to be hit. I mean, I'm expecting this to be hit over the next week or so. Look at the volume. The volume is expanding on the sell side as well. So the transportational average is alerting us to these types of things. All right, you need to pay attention to these signals. Also, have a look at the long-term simple moving averages. We have been interacting with these for almost 3 weeks now. Very different to the picture which is being painted or currently illustrated on that of the industrial average. Pay attention, price is a long way away from the simple moving averages. The S&P 500 a little bit closer, but we are still a long way away from that rising 200 simple moving average. Have a look at the NASDAQ again, close to the 100, but a long way away from the rising 200 simple moving average. Now, if I go back to the transportational average, this picture is different. We've been interacting with it for almost 3 weeks. It looks as though the market, the transportational average, is doing everything that it possibly can to hold on to these rising simple moving averages. What happens if we start breaking the simple moving averages? Well, again, it becomes a little bit clouded. We have to start looking at the bigger trends of the market, where the trend lines, or at least the decelerating fan lines, are showing up to at least support this market on the intermediate time frame. But at the moment, even if you want to look at the weekly candlestick construction, what does this equate to? It equates to that of a shooting star candlestick. Pay attention to these candles. They are telling a story. We've got tweezer tops also on the industrial average. We've got a tweezer top, not so much a tweezer top, but we've got engulfing candlestick patterns on the S&P 500. We also have 2 consecutive doji candlesticks on the weekly time frame as well. If we change to the NASDAQ, we've got a high wave spinning top, and we've got the culmination of 3 consecutive bearish weekly candlesticks. These are all very important things that you need to be made aware of. So again, pay attention to the transportational average. It has a hidden message, essentially. People who know what they're looking for in terms of market direction understand this. They pay attention to the signals, all right? They respect them. They're diligent. Okay, they're disciplined, all right? Because it's very important that you understand this. This is going to obviously trickle through to the majority of stocks traded within these markets, which I'm running through with you right now. And if I extend this conversation into market breadth, all right, the Russell 2000 subsection, broader base, 2000 stocks. Look at the candlesticks. We've seen the false breakout, the whipsaw. We've spoken about potential support areas. Those support areas haven't held, they've broken. And what we're seeing on the Russell is just getting absolutely clobbered back down to these areas of support. You can see on my chart here, I've got this green rectangular box. This is where I suspect that the Russell 2000 is going to stop. What happens next? What is important? If I go out on the weekly chart, look at these decelerating fan lines since the low in 2009. It's been somewhat debatable if this first trend is actually realistic, but generally fan lines or decelerating fan lines, they work in groups of 3, okay, until the market essentially is moving sideways. Now, if we pay attention to the current price action, of course, this is on the weekly time frame, it sort of looks relatively sideways to me. This price action since the end of 2016 into the year 2017, almost through to, more or less into September, very close to, it looks sideways. And we're starting to once again interact with these decelerating fan lines. Now, the big fan line, all right, the macro fan line, which is most important, is coming in at 1,200. I'm not calling for the market to pull back to 1,200. We've got this first fan line here. But again, the question becomes, you need to understand this through the eyes of a technical analyst, is first of all, do we find support here on the Russell coming in at about 1,345? If we do, it then becomes question number 2, what happens on the subsequent bounce? Okay, because the subsequent bounce is probably going to play out over a number of weeks or months. And then, of course, what happens up in these resistance areas over here coming in at 1,420? We can see similarities between that of the Russell, okay, going through the pullback, compared to that of the transportational average going through the pullback, seeing the bounce, and then, of course, going through the next wave of selling pressure, what appears to be the beginning of the next wave of selling pressure. And then, of course, what is going on with the S&P 500, the Dow Jones Industrial Average, and the NASDAQ, which appears to be going into the first wave rotation of a correctional pullback, which is in alignment with the oscillators. This is the daily time frame of the oscillators. If you go out to the weekly time frame, pay attention. We are overbought. We've been overbought for the entirety of 2017. It makes a lot of sense that this market is due for a pullback. I'm not saying that the long-term macro trend is going to break, but again, when you see these sell signals on the differing fractals in agreement on the monthly time frame, again, you need to pay attention, and it cannot and it shouldn't, pardon me, shock you when you start to see days like this. Understand areas of support. Understand that when people are fearful, when they're panicking at those areas of support, generally that is the time to be taking on bullish positions. It just goes with the natural ebbs and flows of market, the sentiment, the psychology of people who are, again, consciously aware of their decisions in the market and those that are not. But now is not the time to be buying, in my own humble opinion. All right. That is really the crux of the discussion, the crux of this Thursday afternoon market recap. What you should be thinking about is, well, what is my plan of attack? What is my action going to be at a later date in the future when prices come down, revisit these areas? Am I going to nibble on some calls, for instance? And am I going to start nibbling on long positions on a bunch of these individual stocks as well? That is a discussion which we have over the weekends in that analysis class. But really, what I wanted to do is just to highlight to you that these markets are most likely moving lower. And it's somewhat foolish to be jumping in so aggressively buying the dip at this location. Now, again, we can see a little bit of a bounce. We could see a bounce on Friday, really through, I don't know, Tuesday, Wednesday, Thursday next week. But the checklist which I have, okay, for myself is, well, I'm not going bullish on the market until it breaks the swing high. But again, secondly, I'm not going bullish on the market until I feel comfortable allocating capital at structural macro areas of support where the market is justified in a bounce instead of buying now and just hoping for a bounce, hoping for the trend continuation. Because what we're seeing right now is breakdowns on the S&P 500 below the 50, on the Nasdaq below the 50, and also we're starting to take out some of the swing lows on the Dow and the S&P 500, which have been put in earlier in the month of August, which doesn't really sit all that well with those oscillators in that natural reset zone and the markets moving into a general volatile type of phase as well. And I hope that, begins to sort of potentially untangle some of the blurriness of current market activity. All right, yesterday I was compelled to make a video on market activity based on this candlestick right here. Saw the parallels between this candlestick on Wednesday and what showed up essentially on the 8th of August, which coincided with the top. All right, you see these similarities here. But again, it's very important that you disconnect yourself emotionally from the market and you look at just areas on the chart which make a lot of sense as to where people should start showing up between now and, of course, then at that future date when we interact with those lower areas. So on that note, everyone, if you have any questions, email me, success@pivotpoint-trading.com. Until next time, enjoy the remainder of the trading week for Friday. I'll see you over the weekend. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.